WCAB.
That is the International Morse Code Signal, and that marks the beginning of my program, Gilbert Talks Taxes, because, as we all know, taxation with representation has not been such a good idea either. Good morning, everyone. My name is Gilbert Carmona. The program is Gilbert Talks Taxes. The radio station, WCAB AM 590, FM 100.9. Those of you live streaming me right now at www.wcab59.com. Good morning, and thank you for tuning in. My telephone number, if you need to reach me during regular business hours, is 828-289-9300. Let me repeat that, 828-289-9300. I have two locations, one at 113 Whitesides Road in Rutherford. The other one is at 226 South Trade Street in Tryon, North Carolina, the beautiful Art Deco building right off the historic downtown Tryon. First thing, I'm really going to try to not have a gloat fest this morning because I called this budget. I'm going to read my notes from last night. So a budget got passed last night. Todd, my engineer, and I were discussing this. What time was it an 11th hour? I went to bed last night. I pulled my notes together, went to bed, and got up this morning bright-eyed and bushy-tailed, ready to do this program. So I did not want to taint myself by looking at any news. So all I know is that it got passed. They passed it at $1.3 trillion. And I'm going to read everything I wrote. I actually said they would not go over $1.5 trillion. So I was off by 200 billion, but you know, a trillion here and a trillion there, and pretty soon you're talking about real money. So I'm really just excited about this because I knew they weren't going to do well. Let me get into that. Let me get into that when I get into that. I'm going to talk. It's November. Todd, you know what November means? November is the countdown. I start talking about last minute, year-end, general just tax stuff you can do, tax deductions. So we're going to do the first one today, 2021 last minute year end. Now I'm specifically talking about business today. I'm going to stick to business income tax deductions. So if you're a business person out there, you might want to really, I was serious when I told Todd, tell him to get that pot of coffee on. They're going to need it this morning because I am taking a dive into the deep end. I'm going to be talking about prepaid expenses using IRS Safe Harbor. We're also, there was a strategy that I was going to really tell people, if you're making too much money, stop billing your clients. Let's get that income down. Go ahead and just bill them back up in January. Or if you've already collected money, you don't necessarily have to deposit it. You may want to hold it if it's checks. But now with this new budget, we may want to rack it all up because taxes are going to go up. We don't know enough just yet. And I'm also going to share a story that I happen to think is really funny about a lawyer who it's going to be my quote of the day, by the way. Let me save that one for the end of the program. About a lawyer who thought he knew how to deal with the IRS. We're going to be getting into that. Okay, first I want to say, before I get into the budget, I want to share this. I was reading. All week I've been reading my Bible. I actually have stopped. I almost don't watch any news now, Todd. I have to stay up to date on some things. I'm very selective about what I watch and what I listen to. Remember that song? I sang it one year. Be careful, little ears, what you hear. For your Father up above is looking down in love. Be careful, little ears, what you hear. Be careful, little eyes, what you see. And we can go on. And the news, how can you listen to people that just blatantly lie? It's just blatant lying. They're not even disguising it anymore. It's like, well, wait a minute. 2 weeks ago, you said, oh no, we didn't say that. Well, I heard you say it. Oh no, then are you gonna believe your lying ears, or are you gonna believe me? Who are you gonna believe? And it's almost like that. So I don't watch it at all. I get my news through the different websites that I get my tax law from, and I get my IRS information from, and when I see it there. So, and case in point, let's talk about the Facebook 4 stimulus checks, $15,000 that you are going to get. I hope you haven't spent yours yet, Todd, because it's gone. You spent it already? Is that with the new car out front? Is that where that came from? We don't talk about that. Okay. Let me tell you, there is no stimulus coming. As a matter of fact, they may ask for the ones they've given them. They may ask for those back. So I don't know. They have agreed to spend 3-point-something trillion, but their budget's only 1.3 trillion. That leaves us a couple of trillion short. Where's it going to come from? No, there is no a trillion here, a trillion there. There is no stimulus coming. There is no stimulus coming. And the story goes back to a Facebook post that somebody made
on a legitimate website.
On a legitimate, air quotes, those of you watching me live streaming, www.wcab.com, wcab59.com, air quotes, on a legitimate website. And you can't delete those, as that fella just found out. He posted something that totally went against his theory, tried to delete it. Once you put it out there, it's archived forever. It never will come off the internet. There will be a website somewhere that will have it. So it's out there. There's no hiding. There's no covering your tracks. There's no deleting it. There's no posting it under an anonymous name. It will come back to you. They'll find an IP address connected to it somewhere. So the latest was that we're going to get 4 more stimulus checks, $15,000. And how did they 15,000 into 4? Because that's not even an even number. 15,000 into 4 is 25, 12. Yeah, okay, I can see that. No, there is no stimulus. There is no nothing. But so I've been reading my Bible a lot more than usual, because what is truth? And I've talked about this for years when I say, what is truth? What is truth? I mean, Pontius Pilate said it. He was staring truth in the face, and he said, what is truth? So I started reading John chapter 1. In the beginning was the Word, and the Word was with God, and the Word was God himself. He was present originally with God. All things were made and came into existence through him, and without him was not even one thing made that has come into being. In him was life, and the life was the light of men. And the light shines on in the darkness, for the darkness has never overpowered it. And there came a man sent from God, whose name was John. Now, this man was a witness to the light. He was not the light himself, but he came that he might bear witness regarding the light. There it was, the true light coming into the world, the genuine, perfect, steadfast light that illuminated every person. He came into the world, and though the world was made through him, the world did not recognize him. And this was the part that really just stood out to me as I was reading this. We've all read these chapters before. And we all know these verses, but as I was reading it, this really came alive to me in a whole new way, in light of the things we've seen, in light of the things we've seen in the last few years, well, this year specifically, but with our past election and all these other things that have happened. He came into the world, and though the world was made through him, the world did not recognize him. He came to that which belonged to him, and they who were his own did not receive him and did not welcome him. But to as many as did receive and welcome him, he gave the authority to become the children of God, that is, to those who believed in and relied on his name. And that's a sad place to be, that you don't even realize the reality of God, the reality of who God is in your life. And we get back to the question of what is truth. And I would just encourage people this week, because you're going to hear a lot of stuff in the news. You're going to be bombarded. There is, the reason they couldn't do more was because the Republicans wouldn't vote. The reason this, the reason that. The reason the man in Virginia won, the governor in Virginia, the Republican won, is because it's never the Democrats. Well, and then the Republicans are guilty of this too. Okay, this isn't a Republican-Democrat thing, but when the Democrats lose, it's always It's not because they've done such a horrible job that we're not voting for them. Look, it's never that. It's that somebody somewhere was whatever, racist or homophobe or whatever. I guess the lieutenant governor of Virginia, who happens to be black, happens to be Christian, happens to be conservative, happens to be Marine, is a racist. Okay, or whatever. It's just all heaping up lies on top of lies. And that's why I don't listen to it. But I'm really encouraging everybody to just ask God, go to God. Let's recognize him for who he is. And who he is the one who made us all. And that's the end result of it has got to be more than just what's going on now. So I was really encouraged when I read this, and I wanted to pass it on to people. We're 10 minutes after, so we've got 5 minutes till we take a break. Todd, keep me posted there. Todd is feverishly engineering here, I think. Is that what you're doing? Yeah. Feverishly engineering. Okay. So I do not want to gloat about this, but I saw it coming. I'm going to get into it. Let me get into this. Some of this I got from accounting, some of the numbers and things I got from accounting today, so let me give them credit. The problem is we're coming into year end, and we're going to be doing year end tax planning every year. My faithful listeners out there know November, December, we start talking about year end tax planning. And it's always a challenge. It is probably the hardest time of the year for me. This year, we had the added pressure that they went ahead and passed tax laws in January that were retroactive. Well, actually, it was into February that went retroactive to January. Now, most of it involved stimulus, and most of it involved some, behind the scenes things. So it didn't really affect a lot of people directly. It was actually, some of these changes were actually pretty good for some people. They waived unemployment up to $10,000. A few things were done in there that were good. So overall, that was okay, but it really made tax planning difficult. It didn't undo any major tax planning, but it came close. So at the end of the year, we try to guess what's going to happen. A few years ago, actually many years, you don't know till that last week what they're going to do. Right before they take their break, they'll have their 11th hour vote, and we'll see what happens, and we'll see what we have, and then we have 2 years to scramble. So it seems like most years we say that year-end planning is especially important. Part of the reason for that is that Congress tends to enact tax law changes every year. However, making planning difficult, Congress also tends to put off passing tax legislation until the end of the year. And at the end of 2017, it was the Tax Cuts and Jobs Act. At the end of 2020, it was the Consolidated Appropriations Act. And now we've got the Build Back Better Act. And then again, now I wrote this before it got passed last night, okay? I wrote this, I picked up on this and read the article, made my changes before, okay? And then again, it might not. The Build Back Better Act has the potential to impact broad areas of tax planning, individual income tax planning, corporate income tax planning, pass-through income tax planning, international tax planning, retirement planning, and estate planning. Pretty much doesn't leave any planning left. That pretty much covers them all. As this is being written, Congress is working on paring back the act from $3.5 trillion to something that might be as low, and I added that would be below $1.5 trillion, to come up with something that the Democrats can pass without Republican support under the budget reconciliation process in the Senate. And I told people, everybody was worried because it was all, the Democrats were in control. The Democrats are the majority. The Democrats had this. And I said, no, it doesn't work that way. We still have rules in place to protect regardless of who's in control. There are rules, and you need serious majorities in a lot of different arenas to make this thing happen. It's not that cut and dry. Oh, we're 51% of it. We can do whatever we want. Well, some Democrats thought that was going to be the case, but then they forgot about this thing called moderate Democrats. They forgot about Democrats in mostly Republican districts who get reelected because they're moderate and the people like them because they may be a Democrat, but they do a good job. There's Republicans in mostly Democrat districts that, well, look at what happened in Virginia. Okay, so let's go back to that. So they get elected because they do a good job, and the people like them, and the people will reelect them. Okay, so it's not always the label. It still is the person. We still are in that kind of an environment in our government. Oh, I know, Todd. It's 15 after. Let me just get to this next. Let me get to this. You're like my mom. Let's get to this next one. A lot of those cutbacks. So I called it. I said it was going to be below 1.5 million, and it was trillion. 1.5 trillion. It was 1.3 trillion. A lot of those cutbacks could be in the non-tax provisions. Those tax provisions that cost revenue, such as the expanded tax brackets for low and middle income taxpayers, could also face cutbacks. The tax provisions that raise revenue are less likely to face cutbacks since they help pay for everything else. However, with an estimated $2 trillion raised from revenue provisions, if the total package is reduced to 1.5 trillion or 1.3 trillion, as we know now, even some of these less controversial revenue raisers could be reduced or eliminated if they are no longer required for funding, and they are not going to be any longer required for funding. So all that stuff that was all on the table that everybody was all worried about really ended up being nothing. All the stuff that was in the media, the IRS wanting to know if you had a $600 transaction in your tax account, and all these things, all of it was just to obfuscate from the fact that they were trying to ram a $3.5 trillion budget through, the largest budget ever. And while I think we really dodged the proverbial bullet on this, the fact that that was even on the table should scare people, because it could come back around in years to come. I'm going to get back into some specific things right now. Let's go ahead and take that first break, and I'm going to talk about individual tax rates. I'm going to talk about the implications of our $1.3 trillion budget. I'm going to get into that, and then we're going to talk about last-minute tax deductions, and I love the story about the attorney who got audited. All that. Yes, the attorney who got audited. Oh, Todd, the story gets better. Right here. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
Hi, I'm Sandra. My husband Peterson and I own Precision Detail and Tint. We invite you to come to our new location at 620 U.S. Highway 64, Rutherford, on the corner of Silvers Lake Road and Highway 64. Whether you need specialty detailing for your car, RV, or boat, or window tinting for your automobile, or home or business, we can help you. Voted Best of Rutherford County for 11 straight years, you will know you will get quality work at a good price. Stop by for an appointment or call 828-245-8889. We're open Monday through Friday 9 to 5 and Saturday 9 to 1.
This is Gilbert. I've made a career out of helping businesses. Something else that can help businesses is a good sign. Let me tell you about DS Signs and Graphics right here in Spindale. Whether it's outdoor signage, banners, printing, or promotional items, call Alex at 828-286-4900. And remember, a good sign is good business. This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300.
We are back. Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. This is a live radio program, folks. So if you want to call in a question, I've got like 3 engineers out there ready to help me. This program's really, I've got 3 and a half. One of them, It's unbelievable. You can call 828-287-3356. One of my able-bodied engineers will pick up the phone, write your question down, and bring it to me. Or you can email me, gilbert@gilberttalkstaxes.com. Feel free to ask me your questions. Now, if you need tax planning, any kind of these tax plannings. That list pretty much I had them all in that list. If you need individual income tax, corporate income tax, pass-through income tax, international tax planning, retirement planning, estate planning, any kind of tax planning, you want to have a year-end meeting with me, please call me. Those of you that are my clients know you will be getting emails and texts shortly. We've already been sending them out. We're getting together to go over year-end stuff. And I really, this year, as I've really been taking a stand back because there has been so much still up in the air, and I'm going to get into that some more. So we really haven't, by now we would have been hitting it pretty hard, but it's been more a stand back and see. But you can call me, 828-289-9300. Again, send me an email, gilbert@gilberttalkstaxes.com. Now, let me pick up where I just left off. Oh, well, we were talking about this in the break, and my vice engineer, Tom, said that 13 Republicans, see, I haven't even had a chance to look through the news about the bill, 13 Republicans voted for the bill. So you see, and they'll say it's a bipartisan. Oh, this is bipartisan. 13 Republicans voted for it, and 8 to 10, we don't know yet, Democrats voted against it. So pretty interesting, I think. Pretty interesting. And you've got those Republicans in very, very liberal districts, and you wonder how a Republican even got voted there. Again, they like him. They or her. They're doing a good job, and they get reelected. Same thing with Democrats in these districts. And some of them have been there for so long that people they just reelect them. They just, they don't even think about it anymore. We tend to have that happen too. Now, a lot of these, let me go on to the next paragraph. There are a few specific objections to some of the revenue raisers. Some Democrats object to the extent to which corporate tax rates are proposed to be raised. Some Democrats object to the elimination of all tax breaks for fossil fuels, which is pretty interesting that Democrats would be opposing this because, and again, it points back to they would like you to think that they're this monolithic block that's just, they're not. They're all over the road. And it's the individual person's conviction and what their connection to their community is and what they're going to stand for is what it gets back to. It's very difficult at this point to know what is likely to emerge as the final product. And I guarantee you if we read that bill today, it's still going to be difficult to determine what the final product is, assuming they can get to a final product. Well, now that was, I'm quoting that from this article this accountant wrote in Accounting Today. There were some people that didn't think we would even have a final product this year because, especially in light of what happened in Virginia and in light of the uphill battle they're going to have next year in the midterms, there was a lot of concern about that. However, once we know what a final product looks like, it may be too late to do significant year-end tax planning in response. Most of the provisions in the legislation have effective dates tied to the enactment date. So there are actually, in the original bills that were being kicked around with the $3.5 trillion, some of the tax provision dates was going to be whatever date the bill got passed. So in this situation, the bill got passed last night. It got passed November 5th. So what we're looking at now is what is going to be as of that date going forward. What is going to be as of January 1st, 2022, or what is going to be even retro to this. There was a provision for the individual tax rates that became effective, and why this date, I don't know, but it became effective September 13th, 2021. So I need to find out if that is still in there, because so if that's the case, then we've got tax law going back over a month, almost 2 months now, back then. So if you had an event after September 13th, you're going to be taxed at the new rate that we didn't even know what that new rate was. So this has really been very stressful for a lot of people. A few proposals, such as the capital gains increases, have retroactive effective dates for which it may all be already too late to do any year-end tax planning. Okay. At this point, it seems that the Democrats will somehow work out a way to compromise on their differences. The failure to enact anything would seem to be much worse for both the moderate and the progressive Democrats than coming away with at least part of what they want, and they may want to try to hold out to get everything they want. Well, I knew that wasn't going to happen. There was no way we were going to have a 3.5 or 3.2 or 3.9 trillion dollar budget. It just was not. There was no way that was going to go through reconciliation. There was no way. They didn't have anywhere near the votes they needed for that. It is difficult to do tax planning in anticipation of what might happen in Washington. Amen to that. I say that every year. But it may well be too late for tax planning after the fact. Tax advisors will want to at least make sure that their clients are aware of the potential issues and any possible actions. And that is what I do. I try to be aware of all these issues. Now, individual tax rates. So in general, what was in most of the bill was tax increases on individuals would only affect those with more than $400,000 in income. However, we've got some issues in there to discuss. A proposed increase on the top individual tax rate of 39.6% may survive. I didn't think it would. That was proposed to be effective 1/1/2022. So that was going to, if you're over 400,000, it was going to raise you up to 39.6%. And then there was a proposed 3% surcharge on incomes in excess of $5 million. Okay, the surcharge may be more at risk. Taxpayers potentially impacted by these tax rate increases may want to reverse their year-end strategy. Okay, and then we talk about that September 13th date. This is where we're getting to the year-end strategy and reversing year-end strategy. When I get into this, I told you to put on a pot of coffee, and I meant a pot. Everybody should be like on cup 2 by now. Okay, owners of pass-through businesses, that's those of you that have partnerships and those of you that have 1120S, subchapter S, and you get a K1. Okay, if you get a K1, you may be impacted by the expanded application of a 3.8 net investment income tax. So there was an income tax that was being thrown about for people that have passed through businesses, 3.8%, which in Washington, that doesn't sound like a lot of money, but when you're actually doing tax returns, 3.8% is huge. That is a lot of money. There was a new cap of 20% deduction for QBI, qualified business income. Those of you that QBI really helped. QBI came into being with the Tax Cuts and Jobs Act, Donald Trump's signature tax bill, so that 20% QBI, was really beneficial. So they wanted to put a 20% cap on that, and then they wanted to do a permanent disallowance of excess income losses. Okay, and there were some further changes. They wanted to change the 3 to 5 year cap on interest, recalculations and all that. And this stuff gets very complicated. Most people don't understand it. Now, I want to get back to that 3% on the $5 million. So there was a proposed 3% surcharge on incomes in excess of $5 million. Now, that seems like, okay, who makes more than $5 million? You'd be surprised. It's just not that much money anymore. Okay? There's a lot of, not at the individual level, $5 million a year is a lot of money. But it's not that uncommon now. It's just not. Most of it's through inflation. A lot of it's through, there's just been a shifting. Let me just say it that way. There's been a shifting. Where it was 1.2 million, then it was 3 million, and it went up. And I've talked about this before with the inheritance tax. The inheritance tax, it was set at, a couple of million, and then it went up to 5.1 million, and Trump's tax bill raised it to 10 million. So, you don't pay inheritance. The estate pays the tax, by the way. The individuals do not pay inheritance tax. Beneficiaries, unless you're the beneficiary of a tax-deferred product like an IRA or a 401k, it's the estate of the person that's deceased that pays the tax. So they raised it from 1.3 billion. It's hard to get your billions and trillions straight anymore, Todd. Millions, billions, and trillions. It was 1.3 million, then it went up to 3 million, then 5 million, and now it's at 10 million. They talked about bringing it back down. I don't think they're going to do that because it doesn't take that much now to have an estate, especially with appreciation. There's people with retirement plans in excess of $2 and $3 million. It's just not. I'm not saying it's everybody has this, but I'm seeing it more and more. I'm actually doing financial planning with people that are bringing me their information, and $2 million, $3 million. They've worked the same job. They just always funded their 401 or their 457 or whatever, 403B, whatever plan they had. They just fully funded it, and they saved money, and they never touched it, just with compounding interest. It just doubled, and doubled again. Anybody that worked their job 30 years plus that does it, 1.2 million is not that out there. So now they were going to have this 3% tax on 10 million. Well, now they lowered it to 5 million. So that's a telling story right there. But what I want to say about it is this, is those kind of people will figure out a way to get around that. Because guess how many people are now going to make $4,999,000, right? All of them. Because if they're just going to go over that 5 million, now all the tax planning is going to be to keep them under that 3%. They say, oh, well, rich people can afford 3%. No, they can't. No, they can't. 3% is still a lot of money. Okay? It's a lot of money. I like when the politicians say, I just want 3 pennies out of every dollar. I heard that one. I just want 3 pennies out of every dollar. No, that's 3%. Okay, in my book, that's 3%. If it was just $1, you can have the 3 pennies, but it's not $1 you're talking about. You're talking about $5 million, and it's a lot of money. And we have more millionaires now than ever before. So it's a lot of money. So a lot of this is still up in the air. We don't know what to do. Let's go ahead. I'm late for the break, I know. Let's go ahead and take the break. And when we come back, we're going to talk about last minute general. So we talked about what all the taxes are going to be and all these tax rates. Now let's talk about how you can avoid some of these tax rates. How can I keep you under that 5 million? So we're going to talk about. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
I want to tell you about another great local business, Forest City Concrete and Grading. Call Sean at 828-447-5949. Sean is a licensed general contractor. He can do your job from site development to completion. That's Forest City Concrete and Grading. Call Sean at 828-447-5949 and tell him Gilbert Talks Taxes sent you. People come up to me and say, Gilbert, thank you for doing my tax return, and thank you for getting me that big refund. Do you have any ideas what I can do with that refund? Oh, yes, I do. Take that refund right over to NC Tractor and Farm Supply, talk to Phil, get you a brand new shiny red Massey Ferguson. That's NC Tractor and Farm Supply, Railroad Avenue. You can call Phil at 828-429-5008. By the way, mention you heard it on Gilbert Talks Taxes. I'm hoping he'll give me a discount when I go buy my brand new shiny Massey Ferguson tractor.
We are back. Gilbert Talks Taxes. WCAB. AM 590, FM 100.9. Okay, I want everybody to get that next cup of coffee. We're going to be talking about 2021 last minute year-end general business income tax deductions. I've compiled a little list here. Just gonna get into it next week. So I'm gonna be doing this every week now till the end of the year. Next week, I'm working on a list right now of things you can do with vehicles, new vehicles and used vehicles. I'm also working on a list with equipment, machinery, talking about depreciation. I a couple of weeks ago, I did a whole program on. I thought it was kind of catchy, Todd. I called it "Get Ready, Set, Depreciate." Huh? What'd you think of that? Huh? Yeah, I thought it was good. So we're going to do that. We're going to be talking about depreciation of assets, and how to use depreciation to reduce your tax bill, or how not to use it to reduce your tax bill. Because sometimes you don't necessarily want to reduce your tax bill this year. We want to stretch it out. So we're going to talk about that. And I'm working on that one. I'm working on the depreciation, and I'm working on the business use of your home. There's a right way and a wrong way to do it. And I'm still having some people doing it the wrong way. Not that, and it's with COVID, you know, the Wuhan virus, Todd, with that, a lot of people working from home, there have been a lot of issues of what you can and can't depreciate or you can and can't write off. Because what happens is if you're a W-2 employee, there's all kinds of issues. And if you're self-employed, it's a different set of issues. So, and are you working for a partnership? Are you working for an S-Corp? So there's a lot there. I'm going to get into that too. So just so everybody's year-end planning is looking good. And now that we have a budget, we can actually really move forward with some more concrete things. So I'm excited about the rest of the programs. I will not, well, I don't know my schedule yet. Let me not get into that. I'll have a better idea of my schedule next week, which Saturdays I'm going to be here or not. We've got a couple of holidays and things. Okay, so let's talk about this. Okay, everybody got their coffee ready? Great. 2021 last minute year-end general income tax questions. Now, I'm going to get into the first one because this one's kind of you really got to sit back and look at the big picture on this in light of the new tax bill. Once I know, and I'll probably have a better answer next week, once I get to look at it and see exactly where we're going to be and how high the tax rates are going to be, we may want to stay in you may want to pay some of this tax this year and not kick it up the street for next year. Or you may want to do the opposite. I know that some of my people that buy homes to remodel them and to resell them have had an incredible year this year. A lot of capital gains. But capital gains were supposed to go up for next year, so my advice was, let's go ahead and claim them all this year. There are some people that actually are holding back on selling some of these homes till next year. So we just got to see why all this tax planning affects everything. And it shouldn't be this way, but it is. Now, my advice for reducing your income this year is to just stop billing your clients. We're already into November. We've got 7 weeks left approximately in the year. And about a good six of them normal business weeks. Then you got the holiday breaks. So depending on the type of business you're in, you may be in a position where you can just not bill clients, just not invoice them. Or if they go ahead and pay, you can hold those checks till the following year. Just because you got the check doesn't mean it was income in this year. If you don't deposit it, you can post it as income for next year. So normally it's a rock solid, time-tested, easy strategy to reduce your taxable income for the year. Just stop billing your customers, your clients, your patients, until after December 31st, 2021. Now, I'm assuming here that you or your corporation is on a cash basis and you operate on a calendar year. Okay, so I'm making this assumption. Because if you're an accrual, that's a whole other strategy. This is for cash basis and you're operating on a calendar year. That means your year ends December 31st, okay? And cash basis is just you post income when it comes in and you post expenses when you pay them. That's cash basis accounting, which most people are. Customers, clients, patients, and insurance companies generally don't pay until they're billed. Okay? Not billing customers and patients is a time-tested tax planning strategy that business owners have used successfully for years. And I do recommend it if you're trying to reduce your income. Okay? So I know I have one client that we've already seen how much money he's making this year, and he has patients, and so he bills insurance companies a lot. He's just done. Actually, I think he's going to bill through Thanksgiving. He's going to, whatever happens the next couple of weeks, and then after that he's just going to be done. He's not going to bill till after January. So he's going to basically just turn that spigot off, is what he's going to do. And you can do this. It's totally acceptable. It's proven. Okay. Buy office equipment. is another way. Now, this is if you're trying to increase your expenses. Now's the time you can buy office equipment. We still have bonus depreciation. Bonus depreciation is 100% depreciation. We've got increased limits on Section 179 depreciation. So Section 179 is where we expense it all now. You know, I've done programs on this before. When you buy equipment, you're supposed to depreciate it. The IRS has lots of charts telling you the life of this equipment. Some of it's 3-year, some of it's 5-year, 7-year, 10-year, 15-year, 27.9-year. It just how many years you depreciate it. But Section 179 and bonus depreciation lets you expense those assets right now, this year. Boom, 100%. So if there's any office equipment, especially some of the little more expensive things like large copiers, computer systems, servers, office furniture, things like that that you need, as long as the equipment and machinery is purchased, and now some of it's got to be placed in service, equipment that's got to be installed, other things just buying it and having it there at the office is good enough. So you buy it, you place it in service before December 31st, you can get 100% deduction of the total cost in 2021. Now, qualifying bonus depreciation in Section 179 is good for new and used personal equipment. So it's good for machinery, computers, desks, furniture, chairs, and vehicles. Okay, I'm going to talk about that when I talk about new and used cars. I'm hoping to have that program pulled together for next week. I'll be talking about new and used cars. Every year I have my one client that goes and buys cars on December 31st. And he's calling me. I always tell Christy, make sure the phone's on because they're going to be calling me. They're at the dealer buying cars. Here's a little extra planning note. If you qualify for Section 199A, that is your QBI, Qualified Business Income. If you qualify for Section 199A, the increased expenses will reduce your deduction. And I'm going to talk about, I might have a whole special program on just that. Okay, use your credit cards correctly. This is another tax planning tip. Use them correctly. I have seen people use their credit cards incorrectly. If you're a single member LLC, okay, so you're a single member LLC and we're putting your business on your 1040, your business expenses are on your 1040, your regular tax return, or you're a sole proprietor following Schedule C. I'm sorry, I said that wrong. You're a sole proprietor filing. Oh, Todd, I'm having a tough time this morning. Sole proprietor. Todd thinks he'd have a hard time just even reading this. Sole proprietor filing Schedule C on your personal tax return, your 1040, or you're a single member LLC. The day you charge a purchase on your business or your personal credit card is the day you can deduct the expense. Okay, now this is if you're a single member LLC or you're a sole proprietor, whether your credit card is a business credit card or a personal credit card. Okay, because there's this thinking out there, and I don't know where this came from, probably from Facebook, Todd, that if you have to have a business credit card for an expense to count as a deduction, that you can't use your personal. No, you can use your personal credit card. Actually, any personal debit card, whatever, it can be deducted. So your business or personal credit card is the day you can deduct the expense. The only exception to that is some pieces of equipment that actually have to be placed in service, but for the most part. So think ahead. If you're trying to increase your expenses, just stop and think ahead. What things can you buy now, or buy them by December 31st, like buy them that day? You've got the Black Friday sales happening now. You're going to have a lot of, holiday pre and post holiday sales. I know there's a lot of sales that happen after the 25th. I've had clients just make major purchases the 26th, the 27th, the 28th. They want to clean out their inventories. And you come in there waving that gold American Express card, they'll want to cut some deals. I've had some clients just really been shocking, the things I've seen. And they'll not only want to make some deals, you can go ahead and buy these things ahead of time. So what things can you stock, reasonably stock that you're going to use? I have some clients that use paper, a lot of paper. I'm talking they use cases of paper. They'll go ahead and buy a pallet of it. And they saved a substantial amount of money and got a real nice tax write-off doing it before December 31st. So buy those things. If as a Schedule C taxpayer, if you operate your business as a corporation, if the corporation has a credit card in the corporate name, the same rule applies. But the charge has to be made on a corporate card if it's a corporation, if you're operating this as a corporation. Okay, so just and that's where I've seen people do it wrong. They are the shareholder in a corporation, but they use their personal credit card, and they didn't get that write-off. But if you operate your business as a corporation and you are the personal owner of the credit card, the corporation must reimburse you. Okay, and that's the trick there. They have to reimburse you, and that happens on the date of the reimbursement. Does submit your expense report and have your corporation make its reimbursement to you before midnight on December 31st. Okay, now this is an error, and we're past the break, but let me get into this one last thing. And in the following weeks, I'm going to be talking about some more things. I've gotten some emails about safe harbor. People have asked me, what is a safe harbor? I'm going to take a deep dive into that one day. I know, Todd's just choked up about it. And I'm going to talk about qualified improvement property. I'm going to talk about those things in weeks to come. I get emails and questions about that, especially safe harbor. This is great for tax deductions, end of the year tax deductions. We'll get into that. The last thing I want to say is don't assume you're taking too many deductions. I say this every year. I think I've been saying this every year for the last 7 years, this time of the year. People say, well, I don't want to take too many write-offs. I don't want to raise any red flags. No. If it's a legitimate deduction and you are legitimately buying a business asset, it is expected of you as a prudent business owner to make that purchase. If number one, you can save money buying it before the end of the year, and number two, you're getting that additional write-off, that additional expense, there is nothing wrong with you doing it, and there is no too many. Like, it's not like a mulligan in golf, where you get as many as you can legitimately take. As long as they're legitimate legal expenses. Do not assume. I have actually had people not expense things. They've actually had receipts, and they'll say, well, I'm going to claim these next year. And I said, well, why? You need the write-off. So you should never stop documenting your deductions. You should always claim all your rightful deductions. I've spoken with just far too many people that do it, and I don't know why. Maybe somebody told them that at some point. And then there was a thing that went around that, well, you don't want to have a negative. You don't want to have a net operating loss, that's a bad thing somehow, or that it's an audit red flag. It is not an audit red flag. Many businesses operate with a net operating loss. It happens, especially businesses that have long business cycles. And a long business cycle means a business cycle that's longer than a year. A lot of people that build homes for speculation, their business cycles, what used to be their business cycles, could be 2 to 3 years. Now it's been shorter, but so they'll have a great year and a bad year. The year they're building the homes is bad. The year they're selling them is good. So that's just normal. And those business losses do carry forward. And there's actually some rules that allow me to carry them backwards and amend prior year returns. So this is a great strategy. Don't ever assume you're doing that. Okay, Todd, I am well past my break time. We have one more break. Let's go ahead and take that break, and everybody can take a breather. And when I come back, I'm going to talk about a lawyer who, I don't know, I just like reading the story. I don't know why. A lawyer who, I think this is going to be my quote of the day. A lawyer who got in some trouble with the IRS. Let's just say that. Okay, the program is Gilbert Talks Taxes, WCAB AM 590 FM 100.9.
As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous. This is Gilbert. I want to tell you about Jesse James Railroad Express at 531 Railroad Avenue in Rutherford. It's a great place. Jesse's a good friend of mine, and I encourage you to stop by and support him. On Mondays, he's doing a 99-cent hot dog, mustard, chili, and onions. When you go, tell him Mr. Fabulous himself sent you.
I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite. We are back. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. Those of you live streaming this morning, welcome. And my hair does look fabulous, but I saw Robin this week. For those of you that were wondering, and I am wearing my vintage. How about that tie? Vintage. Am I going the right way with that? No, I'm going the wrong way. There we go. Vintage tie this morning, yes, with my Orvis sport coat. Purple and gold, yes, and the colors look beautiful online. Those of you live streaming, www.wcab59.com. I asked Tom last week, why did Jim not get WCAB590.com? Was it not available, or .59.com, which is okay. It's fine. But the live stream is great. Thank you for doing that this morning, Todd. It looks wonderful here in the Blue Room. My 3 engineers are out there just talking away. We actually had to close the door.
Feverishly researching tax material.
We're feverishly researching tax material. And, this tax bill is so new. It hasn't even, if you Google it, it's still not even coming up. What's all in it? It's just. So we're building back better. We're building back better. I know, Todd. I said that actually. I couldn't say it with a straight face. I am so sorry. We are building back better. We are. Yes. Okay. So. We got a lot of tax planning going on. If you need to reach me, you want to talk about your business, you want to talk about tax planning, you want to talk about your entity, organization, anything in that nature, give me a call, 828-289-9300. Make an appointment. You can come in. A lot of what I do this time of the year is I'll review your tax returns from last year. If you were with somebody else, or bring me a copy of the tax return. We just go over it. I can address any concerns. A lot of times I find things that, shoulda, coulda, woulda, should have done it better. This could have happened. This would have happened. We can look at those, and it's really worth looking back. I see a lot of business people that just take their tax return. Okay, it's done. That wasn't too painful. I owe this amount of money, or I'm getting this much back. Yay! And they put that thing away. No, that is a valuable tax planning tool for going forward. And we are going into some uncharted waters with some things. We don't know the direction of a lot of things, but there are a lot of opportunities out there, even with a $1.3 trillion budget. I saw a lot of opportunities in a $3 trillion budget. So is it good? Yes. Is it bad? Yes. Remember, you're either coming out of a storm, going into a storm, or you're right in the middle of a storm. Okay? So we're always planning, we're always looking, and it's always changing. Some things are more tax favored than others. So we just got to look for the nuggets of gold in this, pull it out, and see how it applies to you. So give me a call, 828-289-9300. Send me an email, gilbert@gilberttalkstaxes.com. Okay, and I will be here next Saturday. Going to get back into this topic. Okay, I've got 5 minutes left. So I'm going to tell you, and this is just an example of where tax planning, I read the story and I just thought, this is an example of where tax planning and thinking these things through comes in. So there is we talk about the tax home rule. This is an example. You've got people, and we actually have, now it's more in retirement, but we'll have people that will live in one place but work in another. Okay, this creates a lot of issues, but nothing that can't just be worked out. But just be aware, this creates issues. Where I see it happen is people that are winding down, they're looking for that retirement or getting close to retirement, and they might say, well, I'm going to move to a tax-free state, like Florida. When I say tax-free, I mean income tax-free. Like Florida, Tennessee, or Texas are some of the most popular destinations. There are 10 states that have no state income tax, by the way. But some of the most popular are Texas, which all of California is moving to Texas right now. I've got clients in Texas, and every one of them has a new neighbor somewhere on their block from California. Every one of them. One of them told me that he has never seen so many California license plates in his life, and he's been living in Texas for 20 years. Florida is another popular destination. Tennessee is a very popular destination. Okay, so you get into this issue of what is your tax home? Or there are people that may work in a big city, so they will actually rent an apartment or get a place there, but they live in another area for whatever reason. So you get into this tax home. And there's tax home rules for overnight travel. There's tax home business deductions. There's tax home, just all kinds of things, utilities. There's per diem. There's a lot. But there are some rules, and I'm not getting into the rules. I've only got a couple of minutes left. But just know that this is a thing, okay? The IRS, by the way, considers if you're going to work away, let's say you get a job to work in another state, and it's going to be longer than a year, they consider that to be indefinite versus temporary. And why is that important? Because it's important. It changes the rules, and it changes the rules of what you can do. The tax code provides for a work assignment is not temporary if it lasts longer than 1 year. They actually say that that is now indefinite if you can reasonably expect it to last for longer than a year. So there's temporary, that the more than 1 year rule makes a temporary work location your tax home. Okay, so now you're being taxed at that tax home. And where this becomes an issue is, I had a client that had a job assignment in New York City. Okay, so her tax home was New York City. Not a good place to have a tax home, folks, for tax planning and for taxes, period. So it's a big deal. This is a big deal. But the point of the story I want to talk about is, okay, now this went to tax court. This is not one of my clients. This is a story. How many minutes do I have left? Akeem Soboyaded. That is his name. Akeem. I got 1 minute left. Todd. Akeem Soboyaded. He's an immigration attorney. He practices law in Minnesota and Washington, D.C. Okay? Akeem Soboyaded. So Akeem Soboyaded had all kinds of write-offs. By the way, he's Nigerian. Let me just say that in case you're wondering. Akeem Soboyaded, the Nigerian immigration attorney who has a tax practice in Minnesota and Washington, D.C., had all kinds of income, had all kinds of money, and he had all kinds of expenses. And what the IRS looked at was 161 days in Washington, 115 days in Minnesota, and 54 days in Nigeria for whatever reason, and 35 unaccounted for days that were in Minnesota. Okay? So the IRS said to him in the audit, your tax home is Washington, D.C. Not a good place for taxes, folks. Very high tax rate. But what was important about that is they wiped out all his business deductions that he was writing off for Washington, D.C. Everything's more expensive in Washington, D.C. Hotels, apartments, gasoline, everything. They wiped it all out. So poor Akeem had $38,000 of expenses wiped out, $7,800. It just goes on and on and on and on. But this is the quote of the day. He took the thing all the way to tax court because he didn't want to have to pay these taxes. I mean, he got hit with a big tax bill, and it was all because of bad planning. Poor Akeem didn't understand the rules. He was an immigration attorney, not a tax attorney. Don't ever represent yourself, okay, is the law there. But his comment to the tax court judge was, because he didn't have any records, by the way. Let me say that. He didn't keep any tax records. So he couldn't prove these deductions that he was claiming. And they totally turned this thing upside down on poor Akeem. And his comment was, I didn't keep tax records because I didn't know I was going to be audited. Todd, he didn't keep records because he didn't know he was going to be audited. Akeem, let me tell you, nobody knows they're going to be audited. You're always ready for an audit. Those of you that come to me know that. Save every receipt. Never throw any receipt away. And that's good tax advice for Akeem, and it's good tax advice for all of us. This has been Gilbert Talks